Let me just get some insight first around the numbers and the fact that you've stuck to your financial outlook. What makes you so confident in that outlook, given the difficulties in the first half of the year?
Well, what makes us confident is the fact that over the last 6 years, we have worked extremely hard to reduce the break-even point of our company. And as you know, our break-even point is now around 50% of our revenues. So we have become a very resilient company, very agile, and the numbers for the first half of 2020 just demonstrate this resilience, hence the fact that we have a very strong conviction that we will respect this all-weather floor guidance that is an average over 3 years, 2019, 2020, and 2021. So yes, it is an all-weather guidance, and yes, we will stick to it, as our results in H1 2020 demonstrate through the resilience of the PSA Group.
Yeah, you also talk about the fact that you're determined to achieve a solid rebound in the second half. How do you plan to do that if demand remains suppressed?
Well, during the lockdown, we had a very rigorous management of our inventories. As you can see through the numbers, we had a very significant reduction of our total inventory by around 24%, which means that we are entering H2 with a very low level of inventory. The new rebound of our manufacturing system is very smooth, very efficient. We see that the plants are coming back in a way which is very satisfactory from a cost perspective, of course, from a quality perspective. So in terms of manufacturing and supply chain, the rebound has been very smooth so far. The level of inventories entering H2 is very low, so we expect to be able to invoice a significant number of cars in this second half, of course, pending the fact that we would like the overall economy to be as stable as possible. But we see that the conditions for us seem quite promising.
Right. At the same time, Carlos, you're dependent on the European market, which is recovering very slowly and in large part due to incentive schemes in big markets like France and Germany. Are you in favour now of these incentive schemes?
No, we are not in favour of incentive schemes. We are not in favour of any initiative that would distort the market conditions. We would like just to make our customers happy directly with no distortion. But we, of course, enjoy, like our competitors, from those schemes. I would like to tell you that our order book is extremely good right now. By the end of H1, we were 15% up against last year. So our order book is stellar, given the attractiveness and the appeal of our new products, the Peugeots, the Citroëns, the DS, and the new Opels. And this is a very rewarding experience. Our order book is very good. The inventories are very low. Conditions seem to be reasonably stable, and this is something that, of course, we can enjoy thanks to our supply chain that is now rebounding in a very effective way.
OK. Let's just for a moment discuss the proposed merger with Fiat Chrysler, Carlos, because Fiat Chrysler's European operations, as far as I understand, have suffered more than other regional car makers, including PSA. Now, assuming you get approval to go ahead, do you plan to push through with a deep restructuring of Fiat in Europe at all? And what would that look like if you do?
No, we don't intend to do that because the two companies are structurally highly profitable, and therefore there is no sense of crisis inside of these two companies beyond, of course, the COVID-19 crisis, which is, of course, something that we have all to face. And we have seen in the 2019 results that FCA, as much as PSA, have delivered very strong results. Hence, the two companies are strong. The two companies are very complementary in terms of business, in terms of regional footprint, in terms of technology, in terms of maturity. We see that we have a lot of great things to do. And as you know, we have announced a 3.7 billion euro per year of synergies that we intend to implement after the closing, which means that there is a lot of value to be created through those synergies. There is a lot of value to be created through this bigger company to face the challenges of the future. And this is the reason why we are so excited about Stellantis. We believe that we will be stronger together than in a standalone position. And we know that we have significant challenges in terms of investment in new technologies, and to dilute those investments in new technologies, it is better that we do it in a broader perspective with the Stellantis company rather than in a standalone perspective.
Yeah, there have been some concerns posed by certain investors, though, Carlos, or questions at least. One of the biggest questions was whether the terms of the merger would have to be revisited due to the pandemic. Back in June, you yourself said it wasn't really an appropriate time to be talking about that. But another specific question is whether the large dividend Fiat was planning to pay its investors, what the status of that would be, the €5.5 billion special dividend. Is that special dividend feasible post-pandemic, and when do you expect to come to a decision on that?
Well, it's a great question from our investors, and I really welcome that question. I would like just to explain how we are operating. First of all, we are now, as the managing board of PSA, under the mandate of the board approval that was given in December 2019 to implement all the process for this merger. So right now, we are in the implementation and the execution phase of the decision that has been made in December 2019. This is what we are doing. As you know, this is an enormous amount of work, more than 22 filings across the world, many discussions, lots of paper. All of this is being done by no less than 500 people working endlessly to get this done. And we are in the execution mode. This is where we are today. If anything else would have to be done, it would be under the mandate of the board. At PSA, we have a very rigorous governance, a dual governance with the supervisory board from one side, the managing board from the other side. Right now, the managing board is on the execution of the binding deal that was signed in December 2019. If anything else would have to be done, then the supervisory board would instruct the management to do so, and of course we will execute that. At this stage, I think what we need to focus on is first to get out of this COVID-19 crisis in the best possible way, to rebuild and reinforce as much as we can all together the balance sheets of our companies. You see that the resilience of the PSA Group is absolutely obvious, and you can see it through the numbers. So we are stepping out of this crisis. We are rebounding in H2 for a very simple purpose, is to reach the end of the year in the best possible conditions so that Stellantis can be created with a good cash position. And what is going to be important for the management, as much as for me as the leader of this new entity, is to look at the cash position of Stellantis the day where we close. This is going to be the most important point, and as you know, this will depend heavily on the rebound of H2. So at this stage, it is premature to discuss this matter as long as we don't see the magnitude of the rebound, both on the FCA side as much as on the PSA side. And the end of the year will be the time to appreciate in which kind of cash positions we would be the day after the closing for the Stellantis company. This is the mindset rightly, and I think we have to be very professional. I think we have to be very rigorous. We have a clear governance. We are under the mandate of the binding deal from December 2019. We are executing that mandate, and by the end of this year, after the rebound of H2, we'll see what will be the potential cash position of Stellantis.